Tax lien investing for beginners. That might be you. Okay, first of all, you've heard about tax lien certificate, you've seen some advertised, maybe you've heard it through a friend. And the first thing you're thinking of, wait a second, tax lien certificates, what is this? Is this federal tax? In this video, you're gonna have a very comprehensive understanding of not only how tax lien certificates work, but how you can make a lot of money doing it. But we're gonna go fundamentally through the whole process. Watching this video, I promise you, not only at the end are you going to be able to explain this with great detail, but you're also going to be able to make some good money. And isn't that what it's all about? So if you're new to this channel, subscribe. If you've been to this channel, comment, ask questions, do whatever. You understand, you guys are the ones that support it. The more I get from that, the more algorithms go up and the more of these videos I cut. So let's just get right down to it. What are tax lien certificates? Very simple. A tax lien certificate is on delinquent properties. Okay, so this isn't income taxes, this isn't payroll taxes, this is on a property. So the property has taxes. Every property in the country owes county taxes. And this is what makes it really cool. So the state has rules, and they say if somebody doesn't pay their property taxes, you, the county, are allowed to sell that lien to the public. And the interest rate, typically, you might want to write this down, is anywhere from 10%, 16, 18, 25, even as high as 36% on your money. Okay, what does that mean? That means when a property owner is 1 year delinquent on the property tax, the county is going to be required to bring that up to a public sale. Okay, so hedge fund managers, they can't come in there and just buy all the liens. They can't do that. It's got to come up individually. Those will be posted 30 days before the sale. Okay, and the whole list of properties. Now, there may be 15, 16 in Illinois, Cook County. They have 50,000 liens this last year. That may sound like a lot. I want to give the county some credit, because if you look at the county's collection rate, 99.5% of all property owners pay their property taxes. So the county's actually doing a really good job. I mean, if you ran a bank and 99.5% of all the loans that you put out there were paying on time, you'd be on Bankers R Us. So in all reality, the county's collecting 99.5%. The challenge is the public, you and me, want all the taxes paid. Hey, this is not fair. Everybody else is paying their taxes. Bucko, you need to pay yours too. I don't know if his name's Bucko, but that's who it is, okay? So the mechanism that goes into place is, there's property rights out there. So it's been adopted all throughout the East Coast, all the way since, the rest of the United States was created. They said, okay, we're gonna give you 1 year. After 1 year, we're gonna offer it up for sale. But we're not taking the property. There's what they call a redemption period. So once that goes up for sale, you and I put up the money for those delinquent taxes, don't own the property, don't have any rights to the property. All I've done is given the county the money, not the property owner. Now the county can go use that money for things like schools, roads, fire department, et cetera, right? The county needs this money. And you get the interest rate. Should the property owner come in after that and pay the taxes to whom? The county. The county will see that you're the lien holder of record, and they will cut you a check for your full investment plus the interest rate. No fuss, no muss. Everybody's happy. Okay? But what the county does, or actually I should say the state law states it up, these are state laws. This is written in state law. It says the county must give the property owner, let's say, it's called a redemption period, and let's say it's 3 years. Now that redemption period can be anywhere from 6 months on the low side up to 4 years on the high side, again, depending on the municipality. For this instance, we'll say 3 years. That means the property owner can take 3 years to pay off those delinquent taxes, but it doesn't matter. During those 3 years, you're getting whatever that prevailing interest rate is. Now, I'm giving you kind of a broad brushstroke, Sometimes it's 16, sometimes it's 18, sometimes it's 10 with a 5% penalty. There's all sorts of nuances out there. Gosh, in Chicago that I mentioned earlier, it's 18% the first 6 months. Then it's another 18%, that's 36% the next 6 months. Then it's another 18%, and it keeps going for 3 years till it's like over 100%, okay? That's why people are, the buzz about tax liens are. So what happens with that whole process is now you've got a tax lien. Here's the kicker. If the property owner does not come in within that prescribed amount of time, regardless of how little time or how much time it is, you have the county's position. Now, you get to foreclose on the property. And you take the county's position, which means you are superior. All other liens and encumbrances are junior. Okay? I'm going to say that again. All other liens and encumbrances are junior, including a mortgage, including a second, including the IRS. Okay? They have to be notified, and there's a foreclosure process. But make no mistake about it. Whatever that process is in that county, be it 60, 90, or 120 days, if somebody, I don't care who, doesn't come in and satisfy those delinquent taxes, plus that interest rate that's owed to you within the prescribed amount of time, you will own that property free and clear. Now understand, this is where people go, wait a second, I'm the superior lien in position. Well, yes, you are, because you've really taken the county's position. Okay, so I want you to think about this just for a second. Think about this. Every single property, no matter how big or small it is, okay, has a lien on it. The county needs its money. Their only power is this. So by me giving the money to the county, you've basically, essentially taken the county's position. Okay, so in other words, they don't sit there and go, well, you're just a late lien holder. No, the taxes have been owed on that property forever. So what I like to say is, tax lien certificates, if you want to look at them this way, are a phantom lien on the property. They're always on the lien on the property. You just don't see it until you don't pay it. So when you don't pay it, boop, it pops up and takes a superior position, whether you bought the lien or the county still owns it. Because make no mistake about it, if you and I don't go down there and pay the property taxes to the county, eventually the county will foreclose on the property. In this scenario that I'm using, that would be 3 years. So now the county forecloses on the property and they'll sell it for the back taxes. That's for another video. So understand the power that the county has. And literally, the county doesn't care. This is their only source of revenue. Well, not only, but almost only source of revenue, 90% of it. They're like, dude, I control the title. You guys can all do whatever you want. But nobody is getting clear title on this property until the property taxes are paid. I want to be very clear on that. Well, the county is going to be very clear on it. But as soon as that gets cleared on it, the county's good, thank you very much. But that's the one thing that has to be satisfied. Unlike a mortgage, okay, a mortgage, there's a foreclosure on it, but they're just foreclosing on the mortgage. All other liens and encumbrances go with that. So make no mistake about it, when you're buying a tax lien certificate, those are eliminated. That's pretty cool. You go to the sale, but here's the kicker. What if the tax lien certificate is not sold at the sale? This is where it gets to be a lot of fun. It's called assignment purchasing. Assignment purchasing, so it's AP buying. So what happens is that lien goes into inventory. Now, the first thing I know you're thinking of, well, if nobody bought it on the sale, that must mean it's not a very good lien. That's not true. Or, well, actually, keep telling yourself and I'll keep buying them. There's plenty out there. So what I'll do is when I go into the county, I'll say, hey, when's your sale? I'll get all the information on that. But I'll say also is, what happens to the unsold tax lien certificates? Oh, those are available in 30 days. So in 30 days, a second list comes out. Now I've got a bunch of liens that I can just go in on my own leisure whenever I feel like it, and boom, I buy the lien on that property. In fact, I can buy a lien on a property that could have been sitting in inventory for, I don't know, 2, 3, 4 years. So this is what I call, write this down, a foreclosable tax lien certificate. So I go into the county, I find this lien. At the date of this recording, this is 2024. This is a 2021 lien. I'm going, oh my gosh, I can buy the lien and immediately foreclose on this property. 401k. At this point, if you don't have glitters of joy in your eye, I don't know, you may not have been paid. There's so many different ways to make money in this strategy, but you must know the rules, must know registration, must know how the money's due. You must know how to clear title. All of these things are there. Don't worry about it. I've got some free training for you. All you have to do is hit the link down below, higginsmethod.com. I got some free training for you, some free books I'll send out to you, all sorts of stuff out there, free. This is Saen Higgins saying, happy hunting, God bless, and good luck.